Hello and welcome to another update video about Bonk. Bonk's chart is still a 5-wave move to the upside, or it shows a 5-wave move to the upside from the April low, the 13th of April low. I call that an impulse to the upside in yellow, wave 1. Really nice impulse. The fifth wave looks quite long, but it's actually not. If the fourth wave was a triangle, then it's all okay. It reached perfectly the 61.8 extension of the initial waves 1 to 3. In case anybody is interested in learning Elliott wave, if we connect or measure the length of waves 1 to 3 and we compare that with the length of the fifth wave, it takes us perfectly to a standard target for a fifth wave, which is the 61.8 Fibonacci extension of, those waves 1 to 3. From here then a correction or pullback has started. I've labeled that as an ABC structure in wave 2 after a first upside impulse, which we're labeling as a so-called wave 1, which is the first wave of a larger 5-wave pattern to the upside, which indicates, after the wave 2 we should get a very attractive and strong third wave here. So this wave 2 is then a deep correction. The support area is between 233,749 and 161,484, but we haven't bottomed yet. So I have no evidence for a low at the moment. This wave count and the upside potential, it is a potential only. But I'm very much observing this area now for a possible reversal. I've got this 5-wave move up, got this 3-wave pullback, but at the moment it's doing something that looks more like a bear flag down there. All right, so talking about this last bit, strong move down, bearish flag, or don't even want to call it a bear flag. It's corrective. It's corrective, and I'm not suggesting it has to break down straight away. I'm actually actively looking for a fourth wave that's a little bit more healthy than what we've already seen. So what we can do, we can extend this trend line here, and it might just be that we are going to test this trend line in a more extended fourth wave. The resistance area hasn't changed since the last video. Actually adjusted just slightly. But this resistance area, which is between 235,840 and 261,243 now after adjusting, that's really what needs to be overcome by the bulls. So if the bulls can form a 5-wave pattern and break above the red resistance zone, then I would assume that a low has formed already in wave 2. I mean, the move down into the support area, it's deep enough for a wave 2. It's deep enough for a wave 2, but the structure from the low doesn't really support that a wave 2 has bottomed, because then the next move up should be a third wave, but third waves typically start with a blast, right? So it should be something very, very strong, and that is not happening yet. So that's what we're missing, but I'm definitely watching for it. So it's all about understanding price action really, and understand where the market has a chance to turn around. That's typically at these Fibonacci levels. So we have reached an area where we have previous swing low support from April this year, Fibonacci support, especially the 61.8 retracement, but where the structure from the low doesn't really suggest the low is in, and also the microstructure definitely allows for another low. Doesn't mean it has to happen. They can always form a low after 3 waves. Then it would be a WXY pattern, not an ABC. But these are less common. So I need to see confirmation that a low is in. First degree of confirmation or level of confirmation would be a 5-wave move up, break above resistance, and break above the descending price channel. So break above the descending, the upper boundary line of the descending channel, I should say. And then once the low is in, we should see a third wave to the upside, which could reach here possibly 122.0968. And from here, we talk about roughly 500%, or even in the fifth wave, then 1000%. Okay, 1000%, someone commented in the last video, would be completely unrealistic because if it's forming 100x, look at the market cap. Yeah, but 1000% is just a 10x. So it is, it's still ambitious. I'm not saying it will happen, but it's a mathematical projection, but 10x is more realistic than 100x. That's what I'm watching for. A break below the upper support area wouldn't necessarily make the chart bearish. So if we break below the 78.6 retracement here at 161,484, it wouldn't make it bearish, but it would certainly well, it would certainly not be clearly bullish, right? It would mean the price will test the lower support region in a still unfolding fourth wave, which is currently assumed to have completed on the 13th of April. So short term still on the side of caution, not very bullish yet in the very short term, but I can see the potential of an extended fourth wave here. And if we break above resistance, the low was already in. Until then, I expect another low. That's the update about Bonk. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.